Hi, Jonathan York from Bay Financial Partners, looking at the investment markets. No real surprise from the US Fed last week by increasing interest rates, but maybe was quite interesting was the sort of commentary that accompanied that rate hike, and also some of their projections as well for in terms of terminal rates and also US GDP. Now they revised up the GDP to 3.1 from 2.8. That was sort of quite interesting. Also as well, looking at a terminal rate now being sort of 3.4. And the long run neutral rate of 3%. Still expecting 3 more interest rate hikes in 2019. And 1 further hike this year in 2018. Also as well, the key removal of accommodative in the commentary. That sort of intends to imply that much of the slack has been sort of taken up in the US economy. Now, although these changes are sort of really quite minor, they do give a pretty clear insight into where the Fed is thinking. The US economy is strong, it's robust, and interest rates do need to increase further to get back to what's sort of called sort of a neutral level. Now, obviously, what's been quite interesting is that there's been no real commentary from the White House on this. Certainly President Trump has been reasonably critical of the US Fed for increasing interest rates and sort of implying that they weren't really trying to help him recover the economy and grow the economy and make the US economy strong. And obviously, the big caveat on this will be the sort of trade wars, and obviously the big one is versus China and the current sort of trade war and tariffs that are sort of taking place. In the last few days, the Trump administration has managed to negotiate another deal with Canada. That was obviously taken as a pretty sort of favourable, so that replaces the old sort of NAFTA. Has now got a deal with Mexico. But obviously the big question is really how you're going to sort of get around the table and try and sort out a trade deal with China, which is really what's sort of casting a pretty major shadow over global equity markets at present. But at present, US equity markets taking it pretty much in their stride. The Dow is currently trading around 26,800. That's on a pretty firm footing, and it's just going to be interesting to see how it sort of trades into the year end. Remembering that traditionally October hasn't been a great month for equity markets, so it'll just be very interesting to see how we manage to negotiate the next sort of few weeks. But certainly you'd have to say if you get a reasonable unemployment data this Friday, then the Fed's certainly on track to increase rates again in December. Oil's still holding around that sort of $75 a barrel, and so it's just going to be very interesting to see how it trades into year end. We've got sort of the Iran sanctions coming into place now, potential supply disruptions there, and it's just going to be very interesting to see how it all sort of transpires, especially given the fact that Trump has now turned his attention towards OPEC and is now criticising them, I say, for high oil prices. But what he doesn't seem to take into consideration is that the US shale business has really benefited from those higher oil prices. Also, as well, casting a pretty big shadow over the US economy is obviously the midterms. And this is going to be interesting to see how the Republicans do. At present, they look like they're going to struggle, certainly in the House, potentially the Senate as well. And it's just going to be interesting to see how the sort of political landscape lies after the midterms in November. Certainly President Trump is out there on the campaign trail and really trying to sort of hit home with all the sort of key points. It's a really pretty emotive subject, sort of immigration, jobs, economies, etc. But it's going to be very interesting to see, one, what the voter turnout is like, and also as well just to see how the sort of Republican support, and more importantly, Trump support holds up. In the UK, Prime Minister May is still trying pretty hard to get her Brexit deal across the line. Is really sort of saying that is the only way forward, really. The EU has to come and compromise a little bit. There's no good just sort of drawing a line in the sand and saying we're not prepared to budge. And obviously all the time, the clock is ticking down towards that sort of March 2019 when, sort of Brexit really becomes a reality. And is it going to be a hard Brexit, a soft Brexit, no deal? It's pretty, that will have some pretty major implications for the UK economy. Here in New Zealand, the government facing sort of fresh pressure on sort of wage negotiations. Certainly the teachers, it's not going according to plan, and it's just going to be interesting to see if they manage to get a deal put in place. Because certainly at the moment, just sort of a year into their term, the new government is, facing a few sort of speed bumps at least. We've already seen a few issues on the sort of fixed interest side. Infratel have a retail bond in the marketplace, either a 5-year or a 10-year that is sort of reset after 5 years. If you're interested in those, call us on 0800 867 323. And as always, if you are looking for income options, there's plenty of alternatives out there. Call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. And we'll look forward to speaking to you soon.